Hello there, welcome to my channel. In this video, we want to look at how should business income be managed to ensure business success. So you'd see that to measure business success, obviously, we are going to base it on the profit that is being made by the business. So the more the profit that is being made, the more the success of the business. So basically, this is that we have in terms of the relationship that exists between the profit made and success of the business. So within the context of our video, we are going to look at the significance of a profit when a business is being operated. So remember, when the business is being operated, there are costs that are incurred during the operation of the business. So the business is going to use the costs that has been made to calculate the selling price so that they can be able to make a profit. So a margin is going to be added on the cost so that we have a profit. So at the end of the day, we are going to see that our profit, is going to be calculated as the revenue that has been made minus we have in terms of the calculation of our and then I would also see that at the end of the day, we are going to see that if you make whereby our revenue will be equal to our costs plus the profit. So this is another formula that we can come up with, whereby we are saying to get the revenue, you are going to have your cost, and then you add a margin on top of the cost, so that the margin becomes the profit, and then you get the revenue. So with that now, we can proceed to where how income must be managed in such a way that we are given the first point, which reads sales prices are greater than the cost of the product. So obviously, for the profit to be made, the sales price has to be greater than the cost, so that there is a margin that is created, which is now the profit. So this is what we want the first point. The second point says what the sales prices are determined. A price list must be published and should be adhered to. So it's very important that the business comes with a price list that is going to be adhered to as they are selling the products or services, so that there is no deviation in terms of the prices that are going to be charged to the customers. So basically, with that now, it comes as an internal control measure, whereby we are saying there will be no deviation in terms of the prices that are going to be charged to our customers. Then you go to the next point, it says all products and services are given to a customer invoice. So the issue of invoice is also it's a documentation procedure that is also going to enhance the security of the revenue. So that's how we can well manage the revenue, which also entails the managing of income. So on the last point, we've got all sales invoiced are converted into cash immediately as cash sale or later when the debtors pay their account. So after every procedure that we have gone through, we sell the product. But we know that the selling of the product can be on cash basis or credit basis. So obviously, when it's on the credit basis, we are going to create some debtors which are going to pay at a later date. So these are the two forms of sales that are going to be there, that are being illustrated by the last point, which reads all sales invoiced are converted into cash immediately. Those are cash sales, and then as a cash sale or later when the debtors are credit sales. So this is what we have on this part. So we are also going to have the significance of the internal control systems within the operations of the business. So very important for you to take note of internal control, whereby you can be able to describe or define what is an internal control, whereby we can describe an internal control as a process for assuring an organizational process in terms of its effectiveness. So at the end of the day, we are saying internal control ensures that the organizational process is effective, it's also efficient, it's also reliable in terms of financial reporting, and also there is a compliance with laws and regulations and policies. So at the end of the day, you'll see that these are procedures and processes are put in place by a company to prevent, they can be put from the point of view of prevention of fraud, also promotion of accountability, and also to ensure the integrity of financial data. So this is the significance that we have in terms of internal control systems. So these internal control systems need to be in place to ensure revenue security. So remember, we are saying it's the prevention of fraud. So that is an enhancement that we have of revenue security. So we have got examples that are set out with the diagram that we have below. So you see that it reads, this diagram illustrates the process flow of a manufacturing operation in generating revenue and the controls in place to ensure revenue safety. So this is the diagram that we have, whereby this is a manufacturing operation whereby it starts by a customer sales order. Of course, we are going to have the customer coming up with an order that is going to be submitted to the business, and then when the business receives that sales order from the customer, they convert it into an internal sales order, and then from there, obviously, we have the product. And a pro forma invoice also is generated. Very important for us to also to understand what actually do we mean by a pro forma invoice. So basically, a pro forma invoice, it comes in advance of delivery. So this is a preliminary bill or estimated invoice which is used to request payment from the committed buyer of goods or services. So that is a pro forma invoice. So we see that under pro forma invoice, we've got the form of credit sale and the form of a cash sale. And then obviously after all the procedures, we are going to have a tax invoice being generated after we've completed all the other procedures. Then we've got a section for controls to secure revenue. These are now the internal controls, whereby a price list comes as an internal control measure. Remember, we are saying the prices that are going to be charged, they should be there, or they should be in line with what we have on the price list, so that we do not have any deviation. Because if you have any deviation, it means the business might lose some revenue. Remember, we are talking about revenue security being enhanced by the internal control measures. So another internal control measure that can be put in place is credit check. And also, this is also going to enhance the guarantee of payment. That is also a part of our controls to secure our revenue. So this is from the point of view of a manufacturing operation. But obviously, if you move forward, you're going to see that we also have a retail operation. Very important, and we see the procedures that we have under a retail operation, whereby it's going to start with a purchase. Obviously, it's a purchase being done by the customers, and then we have got a till slip that is going to be produced, obviously, after the purchase has been done, and then the product is now there. And then we have cash or credit sale can take place depending on the mode of buying that is taking place, and then we've got goods that has to be passed over. Then we also have a section for controls to secure revenue, whereby we have got price built into goods sold on computer system generating the till slip. So this is computerized. So you would see that at the beginning of the page, we have the appreciation of the significance of the computerized system that is being applied in the modern world. So we have got the statement which reads that the business receives an order and converts it to a sales order, which we have just explained. The sales price of the product is checked against a price list before the invoice is generated. So basically, this is what we have. So under the internal control measures, we have the issue of generation of till slips, and we see that the prices of the goods are in the computer system. And obviously, the computer has to check the price of the good. Obviously, it's maybe through scanning. And then also, we have got the issue of automatic bank check, obviously, depending on the mode of payment that is being used by the customers. Then we have got an explanation of what we have on the diagram beneath that, whereby we have whereby it reads the customer chooses the goods, and the till operator either scans the barcode or enters the details manually. So that's why what we have on this part of internal control measures, whereby it is a price built into goods sold on the computer system regarding the till slip. So if a credit card is presented, this is submitted to a speed point, which electronically logs into the cardholder's bank to confirm the validity, and then goods are passed over. So this is just a process that is being explained as we have a purchase that is taking place in a retail outlet. So this is what we have. And then we also have a service operation, which is also another form of business that we can also take into account in terms of the purchase procedures. So we don't start the purchase, and that is a service operation. And then we also have a generation of a pro forma invoice, depending on the type of sale, whereby it can be a credit sale, cash sale, or a credit card. So after that, we've got goods that has to be passed over. And finally, we have got a generation of the tax invoice, which is it comes as the last stage that we have under the sales, the service sales process. Then on the internal control section, we have got the credit check again, and then we've got a guarantee of payment, and then we've got automatic bank check that are coming as internal control procedures. And then I believe that we've got explanation again that we have in terms of what we have on the diagram, whereby it is in the case of medical practice, sometimes a sale or consultation is carried out via a medical aid scheme. So the credit check would effectively ensure that there are funds in the patient's medical aid account. These basic controls should ensure that revenues are secure for payment and that the correct sales prices are used for products or services. So this becomes the last part that we have in terms of the service operation. And thank you for listening, and we'll meet again in the next video.